We're 3 hours into trading on Friday, January 28th. Thank God it's Friday. It's been quite a hectic week. We've seen a lot of market action both ways. So let's take a look at the market today. We're going to take a look at a few stocks. I'm going to keep this fairly fast. I love what I'm seeing. Right now, I am bullish. I think we're still going to see a little bit of two-sided trading. But for swing traders, I think that this bottoming process is taking place. Earnings have been excellent. We've got the Fed out of the way. So let's start doing some market analysis. Here's what the S&P 500 is doing right now, and here's what I'm looking at right now. Earlier today, we had this market pullback, tails under body. We had support at this level. In my pre-open market comments, I said, hey, this is a support level that's going to be tested. They're going to try and shake out all of these buyers down here. And if we go into a 30-minute chart, you can see how they're kind of stacked up in here. Buy, 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 buy. And what that does is that trading programs know that if they just dunk the market's head underwater, they can check to see what's down there. They know they're going to trigger these sell stops because that's the logical place to have your stop. If you buy here and you see that support, that will be your stop. If you buy here, you'll have your stop just below it. So if you can get just below those points, you'll flush those traders out. Then you're off to the races. So the pattern that we were looking for this morning, two scenarios could have unfolded. One is that we get this breakdown below that support level, and you can see this long red candle right here. Well, that's going to attract shorts. And if we continued to drift lower and drift lower and drift lower, we would have had this follow through selling that we needed to confirm that this was a legitimate breakdown and not just probing for sell stops. So if you're ever buying or selling, shorting the low of the day, you really want to wait for that move. You do not want to act right in here because you don't know. The market could go either way. So wait, and if you get that long red candle through and an instant reversal, then you know it was just a head fake and that was just to trigger those sell stops. If you get that long red bar and then doink, 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 follow through, you can join that follow through because then you know that it's legitimate selling pressure. So when we started the day, we were looking for a formation where we had this support and that this was just a shakeout and a bounce off of that support. Well, these three candles are nice, but hey, we've seen that before. And then we reverse right down. Here was the tell today. So we've got this bullish 10P cross right here. This is the indicator that I use for the market. This is a proprietary indicator. We get these three nice long green candles, and then we pull back about to the halfway point of this range, which is okay. Then we start stacking mixed candles in here. That tells me that support is forming and that we have a higher low double bottom and that we're back in this range and that this was just a head fake. I hope you're following me. We're looking. Is this a legitimate move through that support level or is this just a head fake? Did they just try and trigger those sell stops? We get this move and now we're pretty sure that this was just a head fake. So we come back, we test that. We have a higher low double bottom and a nice bullish 10P cross. So this is the all clear in here on this long green bar. We know that we want to be on the long side and look at that confirmation from the 10P indicator. We also had confirmation from another indicator, and that is UVXY. This measures option implied volatility. As there is more uncertainty in the marketplace, option implied volatilities increase. And so option premiums get super, super rich because asset managers are either buying VIX futures to hedge their portfolios or they're buying puts, in which case they're buying options, the price goes up. So when you see a big spike in option implied volatility, you know that there's uncertainty. Well, this was a tell for us yesterday that the market was not quite done selling off after the FOMC meeting. You can see how we got the spike in the market yesterday. Let's go back and take a look at it because this is a really important lesson. We're going to go back to the open yesterday. So you get the FOMC here on Wednesday. You get a little bit of a bearish reaction to it, but then, hey, everything's good. The Fed's still dovish. Get this nice big gap open. You can see that in the first half an hour or so, that rally stalled out. So now you're starting to wonder, are we going to test support? Is this legitimate? Well, if you followed UVXY, mind you, the market's going up, up, up. The Fed is out of the way. We should see a big contraction in option implied volatilities. They should be just crushing the heck out of it because that's what institutions have done for the last couple of years. They have crushed option implied volatility because the Fed has been printing money like mad. You hear about the Fed put? Well, the market hasn't gone down because the Fed has been super, super accommodative. And so the tendency for institutions is always sell volatility, always sell volatility, always sell volatility. Well, when that option implied volatility remains very, very stubborn and it has a tendency to rise, it tells you that a rally like this, if you also are seeing rising UVXY or VIX, VXX, any of those components, get a market rally and that VIX is stubborn, normally you would expect it to go down. And when it doesn't, then you know that you've got some selling pressure mounting. So let's take a look at what happened yesterday. So there's the gap down, which you would expect when the market is rallying. This is an inverse correlation that it has with the overall market. But then look, instantly it's finding traction and it's actually starting to move higher at a very, very brisk pace. Let's put an SPY overlay up so that you can see what happened in here. You can see how stubborn it is. It just wants to keep going up. When we saw this breakout here to a new high of the day, we knew that there was more selling to come. Think about earnings reactions. So option implied volatilities are super, super high going into earnings announcements. The reason for that is uncertainty. The stock could go either way. And so the minute that that announcement is out, option implied volatilities contract. You would expect the same thing to happen in VIX or UVXY, and it didn't. And that was kind of a tell. So we're going to go into the daily chart and take a look at what it is telling us right now. You can see I've got an upward sloping trend line drawn here, and the level to watch on UVXY is approximately $16 is where that comes into play, maybe $16.50 or so. We want a close below that 100-day moving average. We want to close below that upward sloping trend line. When we get that, then we'll know that institutions are starting to sell option implied volatility and they see that the danger is decreasing in the market and that the market bounce could actually start to gain some traction. So let's take a deep breath. This measures uncertainty. Less uncertainty, good for the market. So this is an indicator that you want to watch. As long as it stays elevated right here, it tells you that there's danger in the market. And a rise in it would be particularly daunting for the market because it means that we're going to continue to go down and that SPY 420 could be in play. So now let's take a look at the market. I wanted to show you that tell. Again, FOMC out of the way, you would expect them to smash option implied volatilities because there was a lot of uncertainty going into this particular Fed announcement because they're going to be talking about future interest rates. Well, they're going to be hiking rates by 0.25% in March, and that was pretty much baked into the market. 95% probability of that happening. So this was not any great surprise. So now let's take a look at what the market is doing. And we're going to go back in. You can see the pullback that we had. And there's the support, 1, 2, 3, 4. And there's your test. And that was your head fake to shake them out. And then boom, here's your rally. So let's get into the current day and see what's happening in here. I'm going to show you how we trade the market. you get this big 1OP rally in here. And what it tells us is that the market is starting to get a little bit overextended. And typically, whatever this indicator does, and it is predictive, it is not reactive. Very important. It is predictive, not reactive. So as it starts to rally and crest in here, which is right about here, we know that if we're long stocks and we're day trading from the long side, or we're day trading futures, whatever we've got on, we want to be in profit taking mode. Does that mean that you have to take everything off? No, but at least start watching the market, start scaling out, know that we're getting towards the end of this cycle. And now we get that bearish cross. So this is a waiting point. Let's say that you came in and you saw this and you're like, this is just a really nice level to buy for a longer term swing trade. This is one of our indicators that popped up. It's incredible. It's developed by a member in conjunction with the 1OP indicator. So I'm going to click that off. But in any event, it uses UVXY as a component for buying puts or getting short. We get this big spike. And now, if you were looking to buy because you were bullish, this is a time. You found your stocks with relative strength. You got your stocks that are breaking out to a new high. You're thinking, is this the entry point? Gosh, the stock looks so strong. It's stacking green candles. God, I'm so anxious to buy. I can't stand it anymore. This is telling you, take a deep breath, wait for a little bit, see what this bearish cross produces. If it produces nothing, no harm, no foul. You'll know that if we were getting this kind of price action in 1OP, about 80% of the time the market will follow what it does. About 20% of the time, if it doesn't, and those 20% of the times are really important to know also, because that would be a divergence, and a divergence would look like this. 1OP falling, 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 and the market holding to maybe even drifting a little bit higher. If you see that type of divergence, then you know that this trend strength is super, super strong. Well, we had a bearish cross. As we would expect, we got a market pullback. So there is no divergence. The point I'm trying to make is that here you are looking for exits. You are starting to take profits on your positions. Pete, I never seem to know when to take profits on my positions. I always cut my winners off too early. Well, this is a way for you to time your exits and start scaling out. And once you start seeing these red candles up here, you can exit the position, you get your market pullback. Now, as the 1OP indicator starts to decline, you're watching those bullish stocks in here. You're like, haha, finally, I'm patient. I'm waiting for my entry point. Now I'm watching the stock. As the market pulls back, you want to see relative strength within the stock. So let's bring up a symbol. I haven't looked at any of these right here, but let's bring one up. Mind you, we're only looking at what the stock has done in the last half an hour, 45 minutes or so. That's the only thing of interest to me. So of course, we want to make sure the daily chart is there, but I just want to show you that example of relative strength. This stock is holding up pretty well, but we do have a double top lower high. Okay, so we don't want that. We want something that's staying right up on the high, tucked right up on that high of the day. And I know I can find one in here. All of these have had really nice moves. I'm going to take the SPY overlay off because it's getting in the way a little bit. And so there's one, UNG. We actually saw this trade yesterday. This is a nice pullback, bullish flag formation. Market was selling off. It was starting to move higher. Put up the overlay just so you can see what I'm talking about. And there you got a market pullback, 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 stock holding, holding, holding. As soon as the market bounces, it lifts off. So that's what we're looking for, is that relative strength. UNG wants to go higher. And I know that because market down, 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 stock up, 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 near the high. This is the pattern we want. Going to the daily chart, got anything good looking there? Oh, heck yeah. Through the 100-day moving average, absolutely. Excellent volume. Put up the 10 volume indicator. And sorry, put the wrong one up. That's the 1-0 squeeze indicator, which is also good. Gosh, I got to do a video on trading compressions. Anyway, volume above average. Blue line greater than 0 means that it is above average. So we got all the elements. I really like UNG. Some of these other stocks may also look really, really good. Want to continue with my market comments here. So here's what I'm looking for. I don't want to get too far off of the high of the day here. If we start drifting farther and farther from the high of the day, it's going to show that there's a fair amount of selling pressure yet. It also means it's going to be harder and harder for us to get back to that high of the day. This is a resting point. This is a compression. This is where I would expect to see some market support. I would want to see that deep 10P trough and then a bullish cross below 0 in here. That would get me back on board. I have a downward sloping trend line. I can use that as a possible indicator of when to enter. For me personally, I'd kind of like to get back above this, and I'd like to do it not in a tick, tick, tick fashion. I'd like to compress here and then get a nice long green candle and a nice long green candle stacked right on top of it through that trend line. Then I know there's a very good chance that we're going to be attacking this high. Very important to have multiple time perspectives. H1 chart. There is a trend alert that I have set. 1, 2, 3 touches for confirmation. If this if this downward sloping trend line is breached to the upside, I want to be in. And that currently is coming into play right around the 438 level, 437 level. Let's call it 437 because the more time the market spends down here, it's going to be coming in. So 437 is a key level right now on the SPY, and I want to see that bullish cross, and I want to start seeing us stack some green candles. If we get through that level, 437, which is right there, almost the high of the day, we start getting through that, we could have a really bullish close. I do like the market right in here. This is the same type of base that we were forming. Big sell-offs like this take time to form a base. So you don't need to worry that, there's the bullish hammer I was looking for. I got to get in. I got to get in. Now, if you had another candle stacked right up here, building on that, okay, yeah, you're probably not going to get much of a reprieve, and you better at least start a position. But when you get this, now you can start scaling into a position. You can see how we've got long-term horizontal support right at this level, right there, multiple touches, and the same type of pattern. 1, 2, 3, 4, 5. Now we got 5 touches here. Sellers cannot knock the market down here. Get a nice long green candle closing on the high. A little bit of jitters in here. So we can expect after heavy selling like this, yeah, we might lift off. It might look great, but you're probably going to get another little drift lower. But eventually you're going to start getting a gap higher and then a gap and go formation. Okay, now we've started to clear some horizontal resistance and we'll be off to the races, and then you get your release. So I like this level right here. I like selling out of the money bullish put spreads. Earnings have been good. Corporations are repurchasing as many shares as they possibly can. Apple has repurchased 25% of their shares outstanding in the last 5 years. That is a huge number. And it's not just Apple. All the mega cap tech companies are doing this. They're issuing cheap debt through bond offerings. Guess what they're using the money for? To repurchase their shares, because they see that as a very attractive investment right now. So that's a force that's going to be in the marketplace, and you got tons of central bank money printing that's been going on for years. All of that cash has to go somewhere. It's not going to go into bonds because bond yields are producing negative real returns. Well, what the heck does that mean? It means if you take the interest rate and you subtract out inflation, which is very hot right now, you are generating negative real returns. Your money doesn't buy as much as it used to a year out, 2 years out because of inflation. So where are you going to go? You're going to go in the market. You're going to go into stocks that have an opportunity to increase prices so that they can adjust for inflation. Well, valuations are pretty stretched right now. So yes, you're going to see a pullback like this. My thesis for the rest of the year is that we're going to see two-sided trading. We are going to see some nice rallies. We're going to see some pullbacks as the Fed starts to raise interest rates. Everybody's going to be wondering if they are tightening too quickly and if that tightening is going to stifle economic growth. So the initial reaction is usually bearish, but then everybody takes a deep breath. And if the economy is able to continue to grow, even with higher interest rates, then you start to get a really nice market rally. In fact, some of the nicest, biggest market rallies have come during a rising interest rate environment. So keep that in mind. Keep in mind all the forces that are in play and that the market, barring any kind of credit crisis, which I don't see a credit crisis right now, there's no credit crisis, you're not going to get a sustained market decline. More likely what we're going to see after a huge market rally like this is you start going sideways for a while. And you get in a trading range, low end of the range, high end of the range. It's a great place to sell out of the money bullish put spreads on stocks that you like. You know that because I've been telling you about it for the last couple of weeks. Hopefully your positions are in good shape. You do need to focus on stocks that are moving higher. I've been telling you, you do not want to be selling out of the money bullish put spreads on tech stocks because that's one of the weaker sectors. You've been wanting to do it on basic material stocks that continue to move higher. Let's take a look at some stocks. That's the main point that I wanted to emphasize today. As always, market first, longer term basis. Market first, longer term basis. Love the support level. Once we get above the 200-day moving average and we start closing above it, you will see a march higher. My target is somewhere around the 460 level. That gets us to the 100-day moving average. It also is the difference, the midpoint between the high and the low, which incidentally, this was a nice support level that I identified quite a while ago, 429. We also had a lower support level at 420 that could have come into play, and that is what is called a measured move. You take that low, you take that high, you subtract one from the other, you get 30 points roughly on the SPY. You subtract 30 points from the $450 level, and you get 420. That would have been worst case scenario for this drop, in my opinion. I like what I see. I really like what I see. Still need to be a little careful. This is not a time to buy calls because option implied volatilities are high. This is a time to sell premium, selling put premium, the way to go. So let's take a look at what the market is doing right now. We're starting to break through that downward sloping trend line. 10p not quite in bearish territory below zero. I do like to see it get below zero and then cross, but we may not get there. I suspect that this is very, very strong price action. So I would still be waiting. Do you remember the pattern I just mentioned to you? We could be off to the races here. Two long green candles, and we're attacking that 437 level. So off screen, I am going to be preparing to take a long position right now, and I do not want to miss this. So just in case it happens while I'm doing this, I want to make sure that I have an order ready to go. And I'm not going to be jumping on this super, super fast because I'm recording and I don't want to be bothered by a position right now. Let's go in and take a look at a couple of stocks and see what we've got cooking. Heavy buying. Very easy list. Greater than prior day high. These stocks are the ones that you want to be watching. We have letter V, Visa, earnings after the close yesterday, hence the A. Downward sloping trend line, breach to the upside. Got the 200-day moving average in the way, so I would not be buying just yet. But I do like anything above that 200-day moving average. Click, click. There's my good till cancel alert line. This stock gets through that point. I've got the broken downward sloping trend line, higher low double bottom through the 200-day. And that stock will come to me on a silver platter. Steep downward sloping trend line on Apple, earnings after the close. decent looking chart here, 50-day moving average in the way. I like Apple and I love this bounce right here. The thing about a big drop like that is you're usually going to get a little bit of a retest and then a higher low double bottom. On any kind of little pullback or dip in here, I would definitely want to try and sell an out of the money bullish put spread below that 100-day moving average. That would be an excellent trade. To keep taking a look, affirm. I'm not a huge fan of bottom fishing. This one has a lot of room to go if it's able to get through these downward sloping trend lines though. DT, BBY, same thing there. UNG, a lot of UNG, that's going to be your pick of the day. I really like it. We've had a lot of cold weather. It's natural gas. I am just going to run through a few other searches. Got a lot of tech stocks that are starting to move higher. CTXS. Yeah, I like that one. Earnings coming up in February, but look at that, right on that 200-day moving average. All right, so it looks like I'm getting in on a call position right here. I'm starting to scale in. So hopefully that position will work out well for me. If not, I'll have a stop as soon as I conclude this video. And if I really like the price action, I'll be adding to it as well. But that's the first of 4 legs. And let's take a look at what we've got going on with NVIDIA. On that 200-day moving average, folks, this is as much as you might like NVIDIA fundamentally, this is not a good chart technically. And I still wouldn't even be selling it out of the money bullish put spread, although you could certainly justify doing one down here all the way down to the 190 strike price. You really want to see better price action before you start doing that. So let's keep taking a look and see what else we've got. GS, these are all bottom fishing stocks. You've got so many stocks that have been absolutely trounced in the last few weeks. I'm going to stick with UNG. I got to keep this video short. I always like to give you at least one really decent looking pick. The main thing is go out, find those stocks that you really like, look for those long-term technical support levels, sell those option implied volatilities right now, go below that technical support, sell bullish put spreads, watch for the market to try and get through that downward sloping trend line that comes into play at 437. If that happens today, we're going to get nice follow through. There's your bullish 10P cross. Things are really shaping up here. I think when I conclude this video, I'm going to be adding to my position. I certainly hope so. And then there's your daily chart, your longer term support level that you can see throughout. And also keep an eye on UVXY. If that closes below $16, below that upward sloping trend line, below the 100-day moving average, then you know that this is going to start gaining traction and that you can add to your position. So you buy a little bit now, sell some bullish put spreads now, get that breakout above 437, you're adding to positions, you get that breakdown on UVXY below $16, you're adding. With a target somewhere around the 460 range, I think we get there pretty easily. Then we've got to reevaluate, reassess. By the way, if you're interested in helping me grow one option, I have a lot of programmers who are coming in to help me with my programming needs. HTML5 program is what I'm currently working on. I'm also looking to build out content. Now, my content I'm going to have free. So I need someone to help me organize that content. Lots of you have educational background. So if you're interested, please look for my email address in the description of this YouTube video. Reach out to me. Let me know. I will need help from people who are able to take the information and help me assemble it and put it together because I've got an awful lot of content that I want to share with you. Thanks so much for watching. Have a great weekend, everyone. Favor the long side. We'll see you Monday. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.